Hello, welcome to HFMA Talk, the podcast for NHS Finance. I'm Sarah Day, Policy and Research Manager at the HFMA. In this episode, we are focusing on the audit of the 2019-20 annual accounts and the adjustments that have had to be made due to Covid-19, both technical ones in the accounts and to the audit process itself. We join a conversation between Debbie Paterson, Policy and Technical Manager at the HFMA, and Mark Stocks, Head of Public Sector Assurance at Grant Thornton. Debbie and Mark discuss the issues that have arisen during the audit so far and the areas where preparations are already being made for the 2020-21 exercise.
Hello everyone, my name's Debbie Paterson. I am a Policy and Technical Manager at the HFMA. I look after the Accounting and Standards Committee and provide a TIG, so tend to focus in on financial reporting. And joining me today is Mark Stocks from Grant Thornton. So Mark, would you like to introduce yourself?
Hi everyone, my name is Mark Stocks. I'm a partner with Grant Thornton. I lead our public sector team, so I'm the head of public sector assurance in Grant Thornton. I've been working on NHS audits for about 30 years now, and I've been engagement lead for about 12 of those, actually signing opinions.
Okay, so I thought we'd start our chat today about talking about the audit market more generally, certainly at pre-accounts planning back in January, which seems like forever ago. We were talking about changes in the audit market, the changes that auditors were facing, particularly in relation to regulation. So has COVID-19 changed anything there? What are the regulators saying as a result of the pandemic?
I don't think that much has changed, to be candid. It's sort of I think it's important for all of us, whether auditor or NHS body or stakeholder, that we maintain the quality of accounts, and that, aligned with that we maintain the quality of audits and hit the standards that we should be aspiring to. Now, having said that, I think NHSE&I have been very pragmatic in their approach to this. We had some very early conversations with them around the accounts and the deadlines, and they've done a number of things that I think have been supportive in terms of changing the deadlines. Obviously, moving back to the 25th of June, and they've also removed the requirement for quality accounts to be audited, which I think has helped both ourselves and NHS bodies. The FRC have obviously a different role, and their focus appropriately has been on accounting standards and audit quality, and they've been very clear that there can be no lessening of the standards, either in terms of the accounting or in terms of audit quality. And they've asked us to, maintain our focus on areas like going concern and significant estimates in the accounts, like property and some of the other sort of evaluation issues, accruals and provisions. So see, there's been, I suppose some pragmatic approaches, but no change in terms of the quality of accounts or the quality of audit.
So, back in the day when I used to do audits, which was a long time ago, it was very much we went out and were on site and talking to people. Obviously, you're not doing that. How are you managing the practical difficulties of doing an audit remotely?
I know that was it was quite interesting, really. At first, I think we were all kind of like, gosh, how are we going to get through the audits working remotely? But to be candid, it's worked reasonably well. I think the IT from both sides, from both the audit side and both the NHS organisation side, has worked particularly well. So in terms of Microsoft Teams or some of the other systems, Skype, the other systems that are out there, that's worked well. We have our own secure system for transferring files, so that's enabled us to get the accounts and the information that we need in a secure way. There are some issues. I think we're all sort of getting used to working remotely, so it's been less easy to get hold of people because people are busy, and it's much more, it's easier when you're doing the audit just to walk up to somebody and go and ask them a few questions and to try and sort of phone them and so on. So that sort of elongated the process to a certain extent. So it is fortunate that we do have more time because of the extension that NHSE&I have granted. I suppose one of the more practical problems is that there is some work that we do have to do on site, things like asset verification and sort of completeness of journals. They're things that we have to do, and so we've had to move to, I suppose, a more innovative approach. So in terms of using photo technology to try and sort of get asset verification, using live streaming to check the source of information and what we get through to us. So that's worked pretty well. There are some things that have just been unsurmountable. So when the lockdown came, it was just before year end, and so obviously we couldn't do the stock verifications that we need to. So that is very likely to lead to some modifications of opinions for some clients. In terms of sign off, I don't think there's going to be an issue with sign off of NHS accounts. I think we're all used to sharing those documents that we need to, and using electronic signatures now. And some of the requirements around submission of hard copies have been withdrawn for 1920. So we're feeling confident that we'll be able to get the vast majority of accounts finished on time.
That's good news, because I know last year it was a struggle, and people were concerned that this year it would be a struggle as well, even without the added excitements of a pandemic on our hands. So
hopefully the additional time will be sufficient, but I suppose only time will tell. We'll just see. Hopefully it will be okay.
And you focus obviously on NHS audits, but talking to your colleagues, do you think that the NHS has been more difficult to audit, given that it's somewhat involved in dealing with the pandemic? Or do you think that the issues that you're facing doing the NHS audit are just the same as other organisations that aren't quite at the front line in the same way?
I think there's different aspects to this, aren't there, in terms of how you perceive the impact. So clearly in terms of who's at the coal face providing care and who's had to focus on looking after people and patients, well that clearly is the NHS, and that's had impacts on the front line, and it's also at times meant that sort of support staff in finance and elsewhere quite necessarily focused on making sure that patients get the right care. When you look at it from a different angle, there was the guarantee around going concern that the government made. There was the support that's been given around sorting out some of the working capital loans and transferring those to PDC. And I think that in the long run will benefit the NHS quite significantly, even though at the moment they're in the cusp of the pandemic. Whereas if you move to local government and commercial bodies, then the impacts are different but significant in terms of the long term. So so for many of the commercial entities that we're working with, then cash flow, going concern, sustainability of business is a real and significant issue, and will continue for the foreseeable future until we're out of lockdown. And then for local government, while they've got some financial support from the government, it's nowhere near as extensive, and their balance sheet looks different to the NHS's. So they have investment properties, they have pensions that aren't government backed, and so we're as concerned about local government as a going concern as we are around commercial entities as a going concern. So everybody's facing different risks and different issues in terms of the outcome of the pandemic and their long-term future.
Yeah, that makes sense. I suppose right at the beginning when the Chancellor stood up and said, almost money's no object, which is a somewhat unusual thing to hear from a Chancellor, that I sort of thought, well, the going concern issue in the NHS is perhaps for this year is not going to be a big issue, but actually it is an issue still, isn't it, despite the fact that at the moment everything is being funded. Can you explain why it continues to be an issue in the NHS?
Yes, it is still an issue. So the NHS is, particularly provider organisations, have always had a going concern issue because they've had significant deficits, or at least a number of them have, and the working capital loans have been on their balance sheet, and we've seen sort of 250 million, 300 million plus, sat there. And so we've, in the past, we've had to kind of work with those bodies around, well, where are the contracts and what guarantees do you have in terms of going concern? And it's the same process that we have to work through this year. But to be candid, it's slightly worse because there aren't any contracts in place. So the contracts only sort of run for the first sort of 3 or 4 months of the financial year. And after that, there's there is the guarantee from the Secretary of State, but it's not a sort of, it's a statement in Parliament, and we have to look at this on an individual body basis rather than on a global or a national NHS basis. So we will judge each trust on its own financial circumstances, and so we'll be running through, what's your financial position? What kind of working capital loans do you have? What's likely to happen next year without the contracts? What's the cash flow going to be like for the next sort of 12 to 15 months? And in reality, I don't think a lot of NHS trusts are going to be able to answer those questions quickly because, those contracts aren't in place. So for most of the trusts who are in that place, it's likely that they will have to put a disclosure in their financial statements, just explaining their financial position, and auditors will be not issuing qualified opinions, but they'll be issuing emphasis of matter within their opinions, which just draws the reader's attention to those going concern issues.
But if a provider, for instance, wanted to put in their disclosure that they were expecting, that there had been a financial settlement for the department, they were expecting that to flow through, they were expecting services to continue in some shape or form, would you, you may still want to draw attention to it as an emphasis of matter, but would you expect that the disclosure would say, whilst we haven't got a contract in place, we are expecting services to continue as normal, and that therefore we will be remunerated for providing those services?
Yeah, I think that's absolutely right. So there's a presumption under IS1 that public bodies are going concerns, or are going concern unless the service is discontinued, and we're not going to move away from that. So I more disclosure is better, because what we're looking at is for trusts to tell the reader of the accounts what's going on, and the reason that we don't issue a modified opinion, that it's an emphasis of matter, which is sort of it's just a note to the reader of the accounts to sort of look at that particular disclosure. It's just helping the reader understand why the board has determined that the trust is a going concern for all of the reasons that we've just articulated, the presumption under IS1, the fact that the Secretary of State has sort of promised future finance, and that there's likely to be a financial settlement, and there's no indication that the services will be discontinued. All of those things push towards the organisations being a going concern. So I don't think it will cause any problems. And to be candid, for a lot of the clients that I work with, they're quite used to this now because they've had these deficits for quite a long time.
But it feels to me that the reasons for the disclosures and the disclosures themselves will probably be slightly different this year to maybe last year, where cash flow was clearly a particular issue, whereas this year probably not so much of an issue. But like you say, there is no contract in place, which I think in all my however long working in or looking at the NHS, I don't think I've ever known a year where there has been no contract in place going forward.
Yeah, well, the cash flows follow the contracts in our view. So you sort of, we have to, if you look at how auditors work, then the going concern view when we sign the opinion is a year and a day from when we sign. So one of the things that we would do is look at those contracts. They take us a long way down the line. So in terms of, covering 2021, if they were in place, obviously. And then, we'd look at those cash flows and what presumptions we could make for that final period from, 31st of March to when we actually signed. So to kind of get there. And it is the lack of surety that those contracts bring. So yeah, I agree with you. I think they will need to do extra disclosures just to demonstrate what's going on within the NHS and why those contracts are in place and what contracting is going to look like over the next year.
So moving away from going concern, what other issues are coming up during the audit of the 1920 accounts? What about the valuation of non-current assets, which has always been a source of audit interest, shall we say?
Yes, well, there's been more focus on property and plant and equipment in the last 2 or 3 years than I think I've seen in my career. But these are obviously big estimates in the financial statements, and they will always remain that way. And there's various different things or different valuation methods that people use, such as MEA, that sort of always bring them to auditors' attention. What's happened this year is when the valuers have started to work through the valuations. Clearly, the level of market uncertainty has made it quite difficult for them to draw conclusions around the valuation of the assets. So if you read a valuation report that's done under the RIC standards, then what a lot of valuers are doing is they're putting in a material uncertainty in terms of their valuation, because it's quite difficult to know what the BCAS indices is going to be and sort of what the value of rebuild will be, which is that's one of the bases for the valuations. So clearly we and the organisations that we work with need to respond to that. And what the vast majority have done is drawn the attention of the reader of the accounts to these uncertainties, both in sort of the critical judgment section of the accounts, but also in the property notes, just setting out kind of sensitivity analysis and so on in terms of what the value could be, and that there is a material uncertainty. So that's the trust response. The audit response, clearly, I don't think it's appropriate for us to qualify the accounts on that basis. But similar to the going concern topic we just discussed, then we do need to draw the attention of the reader to that disclosure note. And so, again, it's very likely that the auditors will be using emphasis of matter or, key account reports to just to draw attention of the reader to the fact that there are these material uncertainties.
So if an organisation hasn't had a valuation report this year, because obviously you don't have to have a valuation each year, do you? Would you actually expect people to have gone to their valuers to say, we were going to roll forward last year's report? Is that a valid thing to do?
Yes, I would. I think it's, they need to be having these conversations, and talking to their valuers around, well, what does this mean for us? Is that still a valid valuation? What's happened? When trusts roll valuations forward, they use something called the BCIS indices in most cases, which is a building indices which shows what the changes are in the values, and then they look at local factors to kind of either diminish or enhance that. So we would be expecting that conversation with the valuers. We'd be expecting trusts to have a look at the BCIS indices, and I think we'd expect them to make a similar disclosure. I think it's not unreasonable for all the reasons I've given that, why is that value any more accurate than the valuations that have been given at the end of March 2020? And if the valuers are going, there's material uncertainties in those valuations, well, there's clearly quite a lot of certainty that there'll be material uncertainties in all valuations.
Stock takes, obviously you mentioned that you couldn't go and do them, and in fact some NHS bodies couldn't do them. So is stock, or inventory as we're probably supposed to call it these days, is that going to be a particular issue for this year?
It is a particular issue for this year, not for everybody. If you look at the vast majority of NHS trusts, then the stock isn't material to audit opinions, and so it's not a problem that we haven't been able to get out to stock takes for those organisations. Although I would expect if trusts haven't been able to do the stock take themselves, then again they ought to be making some form of disclosure on that. Where the problem does come in is for some of the larger organisations who do have material stock balances at the year end. Now, quite a few auditors, the lockdown was in place, wasn't it, at the 31st of March? So the vast majority of auditors won't have been able to get out on site to do those stock valuations, and it's almost impossible to do sort of retrospective procedures. And then for some trusts, they've also not been able to get out and do those stock takes themselves, particularly where it's sort of theatre stock or ward stock, where it's just not sensible to send people out, or safe to send people out to take those to undertake those stock checks.
The other issue which you have touched on is judgments and estimates, and in particular around provisions. And I know again at pre-accounts planning there was discussion about provisions, particularly around various staffing issues. So the Flowers case around holiday pay and annual leave, and also the clinicians' pensions cost provisions. So have there any other provisions or judgments and estimates thrown themselves up or been thrown up by the pandemic, or just as there's always something that comes out of left field, isn't there, in an audit in any year? Is there anything come out that way?
Yeah, it's an interesting, good question. So Flowers and the clinicians' pensions, you're right. They're absolutely areas where the auditors will be focusing. Flowers, I think, is pretty clear now, but I think for most places we don't think it's going to be material. And then, in terms of the clinicians' pensions, then there's so much guidance out there now that we don't really see problems. Where we will be focusing our time is trying to work with CCGs to get their year-end estimate right on their prescription costs, because usually what we do is we or given the timetable, what the CCGs do is forecast month 12 on the back of the 11 months that have passed, and that's always worked pretty well in forming that estimate. But month 12 seems to be more difficult this year because different CCGs and different pharmacists, doctors and so on, behaved in different ways at the year end. So, there's discussions going on with CCGs as to whether those estimates, a month 12 estimate is actually accurate, and whether it should be substantially bigger. So that's probably the main area of estimation uncertainty at the moment.
And will you, by the time you sign off the opinions, will you have got the month 12 information, which you normally wouldn't have, would you, by sign off time? Is the delay in the sign off timetable actually going to reduce the uncertainty?
We're hoping it will. We're hoping to have that information, but I don't think there's any surety at the moment. I think the department and the Prescription Pricing Authority are working through that, but we would hope to have it. I suppose there's, the possible consequence of that is that the figure may be bigger than had been assumed in the original estimate. So there'll need to be discussions between auditors and CCGs as to whether the accounts need to be adjusted for that. But hopefully we'll have the right information.
Obviously, we've talked a lot about stuff that happened just at the end of March, because that's when the pandemic was declared. I know certainly I'm sort of thinking, I must remember that for when it's the 2021 accounts, and there's going to be quite a lot of accounting issues that are actually going to fall into 2021. Is that already on your radar, or have you got enough on your plate just getting the 1920 accounts put to bed, so you're not worrying about it yet?
Well, we always try and look ahead, so that's because it sort of helps not to store up the problems, doesn't it? So, I suppose a quick list from me. What were the expenditure controls like? Are we going to have sort of fraudulent expenditure within the accounts? The NHS has had to move really quickly, so what's happened there? The agreement of the contracts. So how does this year look? You said earlier about the guarantee from the Secretary of State in terms of finance. Well, there's all those COVID claims going in quite rightly from NHS Trust. So how do we verify those, and how's it brought to account, and is everything valid within those claims? So that's something. IFRS 16 is going to come back, so we've sort of had a bit of a moratorium, haven't we, in terms of that being turned off for a little while, but that'll be back in full force next year, so we need to get hold of that. We'll need to work through all those PDC changes, so around borrowing and sort of the settlement of that debt. I'm sure there'll be continuing CCG mergers, and then obviously the prepayment restrictions were lifted. So what are the consequences going to be for that? So yeah, it's going to be interesting because, of course, I suppose the other thing I'd missed out was there's going to be unpaid leave, isn't there, for NHS staff who've been, working so hard. Then accruing for that and managing that cost is something that we'll need to work with organisations on as well. So quite a lot. So and that's just my list for today.
And added to that, you've got a new code of audit practice, that applies from 2021. So I know that in terms of the accounts, it probably doesn't change much. The accounting standards remain the same, but in terms of value for money, that was going to be a fairly big change.
Yeah, I think that is a big change, and we've been talking to the NAO, who obviously set the code over the last sort of 6 months, and they're working up various examples in terms of what's required from auditors. But instead of giving we still have to give a value for money conclusion, but rather than just giving that statement and reporting by exception, There's a clear expectation now that there's a narrative statement covering finance and governance and partnership working, which is, I suppose it's going back 10 years to what the code used to look like. And those narrative statements are just going to take auditors longer to undertake. And there's going to be, more detail in those. And that, to be candid, I think will be helpful. I think it will be helpful to organisations in terms of getting an independent perspective on the work done. But I think it's also going to be beneficial to stakeholders and the public in terms of understanding in what's going on at organisations. But undoubtedly, there's going to be more work. Interesting, the other major change that I see in the code is that there's a duty on us to report immediately. So if we have concerns around how organisations are being run, then rather than waiting for sort of the value for money conclusion around this time of year, then we now have an obligation to report immediately on our concerns to the board. So it is a substantial change, the code, but I do think it's a change in the right direction and will be better for the NHS.
But we might see more reports earlier in the financial year, rather than, like you say, sort of waiting till May, June time to get the audit reports out.
I think so. I think it gives us the opportunity to intervene at an earlier stage if we're uncomfortable with anything that's happening in organisations, or even if we just think organisations need help and they're not getting it from from bodies who could support them.
Yeah, absolutely. So it sounds like both this year and next, the audit report's actually going to be quite an interesting read, and won't just be the usual statements, and there'll be some fairly meaty stuff in there.
I think so, particularly next year with the new code. I think there'll be some, much more openness in how auditors are reporting. So this year, I think we're all looking to just get things across the line in a safe way, so we can say, it's been a quality set of accounts and it's been a quality audit. But yes, things are changing.
And on that note, are there any positives to the new way of working, other than the fact that we're all working from home and none of us have had a haircut in nearly 2 months? Are there any positives coming out of this? Are there things that you actually might want to keep?
I think there are. I sort of we've been starting to look at this as an organisation, and but also talking to our people about what they like and what's which aspects of this would they like to keep. And initially, what this has done is reduce travel down to next to nothing, and yet we're still able to deliver, even though it is, as I said earlier, slightly slower. So there must be a way to keep that work-life balance for our people, by continuing some remote working, but find a way to kind of speed up a little bit so we can hit the deadlines that we're being asked to meet. So I think those people advantages are really strong. So more remote working, I think that's definitely on the cards. More remote meetings. I've had so many calls with directors of finance and so on, and even internally, and for those meetings I'd have travelled. And similarly with audit committees, they've all been held virtually, and just the time saving and our ability to communicate effectively I think it's actually improved. So I have to say I'm a bit tired of lockdown now, but in general, so I am a fan of the changes in what's being forced through. So we need to keep hold of some of this and make sure that we keep the good bits that have come out of necessity.
Yeah, absolutely. I think we're all a bit tired of lockdown now, aren't we? But the working from home thing, I'm an advocate of it. I've been doing it for over 20 years, so definitely think it's a good thing. And maybe the NHS bodies aren't desperately sad that they haven't got the auditors with them for a whole 2-3 weeks or however long it is, and they're just are popping up on a computer screen every so often.
I think so. I think that's the biggest dilemma though, because to hit the deadline, the previous deadline, it requires a level of urgency, and so that does require people to be sort of almost on top of one another, driving things forward. So we will. I think we may have to return to some of the old ways, just to presuming the deadline goes backwards to where it was, we will have to return to some of the old ways to try and make sure we can deliver this on time. But then again, I'm not convinced that we need to return to the old deadlines.
Well, it is a time to rethink all of things that we thought were absolutely set in stone, isn't it? So perhaps revisiting the deadline might be on the cards. Maybe Parliament don't need the accounts just before they go on their holidays, and they can wait for post-holiday reading.
Well, you do wonder how many MPs take them with them to kind of peruse while they're on their summer holidays. But I think the thing for me is it's around the balance and the pressure on the NHS and on auditors, and we do need to take that seriously and consider, how sustainable are these deadlines, and is it something that we should keep? And and given the focus on ensuring that accounts are of the right standard and that audits are of the right standard, then we do need to rethink these things and just make sure that we are behaving appropriately.
But presumably, we're always told that for the auditors, they go from the NHS audits straight into the local government audits. So for your audit teams, are they expecting to finish the NHS audits sort of 25th of June and then move straight into local government? Or I know the local government deadline's been moved back, but is there a breathing space, or are the auditors not ever going to get a summer holiday ever again?
So, the deadline, you are right. So we do move from health into local government, but for this year, the local government's gone back to the end of October. But again, I think it's the same question for local government as to why we need to have their accounts finished by the end of July, and whether that's actually sustainable in terms of people and in terms of hitting the quality standards. And the pressure on us all to get the accounts right, I think, pushes against these very tight deadlines that don't allow us to spend the time to think things through and to make sure that we are doing things appropriately. I think it is time to reflect on health and local government deadlines. They are the tightest deadlines that the country has in terms of delivery. You don't see this pressure in commerce or in higher education or in further education or in housing. So it is. I often wonder why we continue to do this to ourselves.
It's been fascinating to discuss these matters with you, and it's brought back all sorts of memories of going out and doing audits many, many years ago. So thank you very much for your time.
You're welcome, Debbie. It's very nice to chat to you.
This podcast was recorded before the 27th of May, when NHS England and NHS Improvement issued a statement in relation to provider and commissioner forecasting and going concern.
All of the HFMA's COVID-19 related briefings, blogs and news articles are openly available on our website, hfma.org.uk. There is no need to be a member to access these, so please tell your colleagues. We have also launched a forum where finance colleagues from across the NHS can discuss issues and challenges in a safe space. You can sign up via the link in the network section on our website. If there are particular topics you would like future podcasts to cover, then please get in touch via our email address, policy@hfma.org.uk. Thank you for listening to HFMA Talk. Don't forget to subscribe to this podcast to keep up to date with new episodes.